So like I said, we've already really kind of discussed this when we talked about educator expenses. So expenses, so that was the income part. Here's the expense part. And expenses have to be ordinary and necessary, and they have to be reasonable. Remember, ordinary and necessary is in the tax code. That reasonableness factor was determined by the courts after some court cases came through. Same criteria that we talked about before. So ordinary, it's customary or usual in the taxpayer's business. Necessary means it's appropriate or helpful. Not that it's indispensable, right? But that it's appropriate and helpful, okay? Also, we've got, it has to be reasonable in amount and, and reasonable in relation to its purpose. Oh, they kind of added that one. So making payments to related parties that are larger than normal would violate the reasonableness standard. And they've got an example here of what they mean by that. So here we've got Minato owns a successful landscaping business. He's in the 35% marginal tax bracket, and his 17-year-old son Brian is employed by him. So to reduce his taxable income and provide money for Brian for college in the fall, he pays Brian $25 an hour. But everybody else is paid $10 an hour. But Brian's getting special treatment. Well, that's not reasonable in amount. A reasonable amount for Brian would be $10 an hour, just like everybody else. So the additional $15 an hour would not be considered deductible. Because all Minato is doing here is transferring income to his son who's in a lower tax bracket. Or maybe doesn't even have to pay tax at all, right? Maybe he can pay him just enough to keep him under that threshold for how much he owes. And all that's doing is shifting that income and reducing his tax in that way. But that would be disallowed. That additional, if he got audited, that additional $15 an hour that he's paying Brian would be disallowed as an expense. Let's see. Also, in addition to this, there are some forbidden expenses. Forbidden. Illegal bribes, kickbacks, and other payments. Payments for lobbying and political expenses, and payments for fines and penalties are not deductible expenses. Illegal bribes and kickbacks, there are some jurisdictions in this world that would be an ordinary necessary business expense, but they are not, you cannot deduct them on the tax return. So even if it's part of the cost of doing business, okay? Lobbying and political expenses, so if you're making donations, those corporations, we hear about corporations making these donations to political parties and all that stuff, you can't deduct them. They're not deductible to the corporation. And they're not deductible to individuals, either individual businesses. And then payments for fines and penalties. So if you get a speeding ticket while you're traveling for work, the speeding ticket is not deductible, even though you're on the clock and you're traveling for work, okay? Here's an example of that. I'm not gonna go through that example. So yeah, I showed you the sample of possible expenses. The list of expenses, again, there are many, many more types of expenses than just that, but all of them have to be ordinary, necessary, and reasonable in order to be deductible. Some of the expenses as well have additional conditions and limits to their deductibility. We're going to talk about some of those, what those limits are. Questions?